Los Angeles area real estate broker Armen Mardirousi here, the real estate yogi, with my home buying 101 series, episode 2, owning versus renting. I'm the real estate yogi.
The real estate yogi.
Owning your own home might not be one of the defining qualities of the American dream, the set of ideals that includes opportunity for prosperity and success, and an upward social mobility for the family and children achieved through hard work. However, home ownership is surely integrated as one of the strongest representations of that vision. 66% of Americans own their own home, and more hope they will or wish they did. Something about homeownership plucks a strong chord with Americans. Financial security, permanency, status, and pride. Whatever the reason for wanting to own your own home, there has never been a time in recent memory when the health of our credit reports meant so much. Lifestyle plays a big role in the decision to own versus rent. Home buying is most often driven by household formation, such as marriage and childbirth. Less than 40% of people under 35 years old own homes. 60% of people over 35 years old own homes, and more than 80% of people 65 years old or over own homes. Interestingly, for the millennial generation, the primary reason for buying a home, owning a dog. The US homeownership rate has fluctuated between 62 and 70% since the 1950s. Most young people begin their independent lives renting an apartment, maximizing lifestyle flexibility and minimizing the hefty upfront cost associated with purchasing a home as they build careers, save money, and start families. Many choose to buy a home, recognizing that homeownership as opposed to rental living is more appropriate to their growing family needs. Their needs might be better filled in a single family house, a condominium, a townhouse, or a duplex of their own. At the other end of the age spectrum are homeowners nearing retirement who may desire to sell their home, downsize, avoid the maintenance and other obligations of home ownership, and go back to renting. Which is best? Is it better to rent or buy a home? Most adults ask themselves this at some point as they form their goals and plan for the years ahead. Before you answer the question, here are some things to ask yourself. Owning and renting each have their advantages, but what's best for you depends on your circumstances. What will be the duration of your stay in the home? Each market is different, but whether the time you plan to spend in the house warrants its purchase is possible to predict. In general terms, it takes 4 to 7 years to break even on a home. For example, where there has been enough appreciation to pay back the cost of the transaction and cost of ownership. If you're thinking about buying a home and selling it in 2 years, buying is very unlikely to be cheaper than renting. Do you think of or need your house as an investment in your retirement plan? Americans are used to their homes being a store for wealth to liquidate in retirement and downsizing their lifestyle. In 2015, Gallup reported that for the second straight year, more Americans named real estate than stock, gold, savings accounts, and CDs or bonds as the best long-term investment. Real estate leads with 31% of Americans choosing it, followed by stocks and mutual funds at 25%. A cautionary note though, although home prices have recovered their pre-2016 market slump and continue to rise, the value of your home can fall as well as rise. Are you financially ready? Owning a home is a financial commitment that requires planning how home ownership fits into where your life is headed. Ask yourself what your budget is and if either buying or renting would require you to stretch your finances. Crunch all the numbers. A frequent mistake of first-time home buyers is comparing a month's rent to a month's mortgage payment. Many people don't have all the numbers. There are many additional fees necessary to include to make a fair comparison. Principal, interest, property taxes, property insurance, homeowners association or HOA fees, and ongoing maintenance. Are you prepared for the down payment? This is the lump sum payment that funds your equity in the property, how much the property you actually own. Down payments vary. 20% is preferred and gets the best rates. There are some loans that allow down payments as low as 3%. Sometimes relatives help with the down payment. If you have a choice, take a gift rather than a loan, because lenders will add that debt to other monthly obligations and potential mortgage payments to determine your debt to income ratio, which generally can't top 43% to qualify for a home loan. Can you afford the monthly mortgage and its components? Generally, a mortgage includes loan principal and interest, both amortized over the life of the loan, plus homeowners insurance and property taxes, which are prorated. These items can affect the monthly loan-only payment by several $100s. Are you emotionally ready? Can you handle the stress? A big factor to consider when buying a home is stress. Stress overload can lead to missed payments, which can result in destroyed credit or even losing the home. It's better to rent if your life is in flux and then buy when your stress levels are lower. Are you ready for commitment? Are you ready to make lots of decisions, from picking a real estate agent to picking paint colors? Are you confident enough to choose a neighborhood where you believe home values will continue to appreciate in value and that will serve your needs, i.e., the proximity to schools, shopping, recreation, etc.? Are you ready for devoting the time and attention to maintaining a home, like raking the leaves, grass cutting, appliance maintenance, and repairs? Taking care of your biggest investment can be gratifying, but only if you're ready. Control over housing expense. By selecting a fixed rate 15, 20, 25, or 30-year mortgage, the homeowner has assurance that housing costs won't increase over the period and, in fact, will be eliminated at the end of the term, subject to refinancing, of course. You build equity. Some of each month's mortgage payment goes towards the loan's interest. Other portions may go to the homeowner's insurance and county taxes. The remainder pays down the loan principal. Every dollar put towards the loan's principal represents a dollar of equity, actual ownership of the property. Further, the property should appreciate in value each year. With certain blip periods, such as the 2006 housing bubble burst, home prices in the US appreciate nationally at an average rate between 3 to 5%. Home value appreciation in different metro areas can appreciate at markedly different rates than the national average, of course. Improvements increase your home's value. A homeowner can also increase a home's value through home improvements, thus both making your home more comfortable and enjoyable while growing its loan to value or LTV ratio. For instance, adding a bathroom or finishing a basement substantially increases the property's functionality and appeal while potentially boosting its value. There are significant tax benefits associated with buying a house, both at the time of purchase and for the duration of time you own the home. Homestead exemption. Many states exempt owner-occupied homes or homesteads from a portion of the property tax amount that would normally accrue. For instance, Louisiana exempts the first 75,000 of the home's value from property tax assessment. So a $200,000 home in New Orleans is taxed as if it was worth only $125,000. Check with a qualified accountant to learn more about your local tax laws. Federal tax deductions. When you're looking to purchase a home, it's important to understand what you can deduct on your tax returns and what you can't. Property taxes and interest paid on your mortgage can be deductible if you itemize your federal income taxes, which can reduce your income tax burden. Many home buyers, unfortunately, overlook the effect of mortgage interest on their federal income taxes. Mortgage interest can be a powerful financial planning tool. Calculate the amount of mortgage interest deductions you are eligible for and include that in the annual financial planning. Then make a point of checking IRS Form 1098, which you'll receive from your lender at the end of the year. This form shows the amount of mortgage interest that you've paid. Current mortgage rates are at an all time low. Interest rates vary through the years. Several years ago, interest rates were higher. Heck, they were higher just several months ago. And it was more expensive to obtain a mortgage. Since these costs have been reduced, it's now easier and less expensive to own a home. Ownership rights and creative freedom. Your decorating and home improvement choices are just that, yours, provided they don't break building code or violate homeowners association rules. You can paint the walls any which way and add fixtures, update or finish your basement, or build a patio or deck. Changing your environment to suit whims is a freeing aspect of home ownership. A sense of belonging to the community. Homeowners tend to stay in homes for longer than renters and are more likely to grow roots. They might join a neighborhood association, sponsor block parties or national nights out, volunteer at a nearby community center, join a school group, or align with a business improvement district. Renters might not do any of those things, particularly if they know their lease is up in a year and they might move. There's an intangible, pleasant feeling attached to owning your own house, a sense of freedom and independence. The home you live in belongs to you and you only, and you can do what you want with it. You aren't daunted about increases in rent or risk of losing the lease. You're free to make improvements and changes. Also, owning your home gives your children a guarantee of attending the schools in the area on a more permanent basis. You never need to worry about a notice from the landlord to vacate your rented house or apartment for a variety of reasons over which you have no control. Advantages of renting. It seems a shorter list, but one man's pro is another man's con, and there certainly are advantages to renting to factor into your buy or rent decision. No responsibility for maintenance. Admittedly, this is a big one. As a renter, you're not responsible for home maintenance or repair costs. If a toilet backs up, a pipe bursts, or an appliance stops working, you don't have to call an expensive repair person. You just call your landlord or superintendent. Renters in condos, townhouses, or apartments don't have lawn and grounds care obligations. Relocating is easier. When renting, relocating for work is easier. Though a sudden move may require you to break your lease, you can partially offset the cost by subletting your apartment or with your landlord. On the other hand, selling a home takes time and effort. If you have a short timeline to sell your home, you may be forced to accept a lower price and lose some of your investment. Disadvantages of owning. Maintenance. The renter's largest advantage might just be the homeowner's major disadvantage. While insurance might be available to protect against expense from major catastrophe, usual maintenance items are on the homeowner's dime. Maintenance and repair can be as simple as repairing the baseboards and can also be as expensive and extensive as replacing a AC system or sewer pipe. The expense will vary from year to year. However, you can expect to pay about 1% of the value of your home annually towards these expenses. So, for example, if you live in a $200,000 home for 10 years, that's $20,000 over the period, and perhaps more if you must replace a costly, long lived mechanical item, such as a furnace. Keep in mind the usual homeowner's chores of lawn care, snow removal, gutter cleaning, and other regular home maintenance needs. Upfront costs and closing costs. Buying a home entails numerous upfront costs. Some are paid out of pocket after the seller accepts your purchase offer, while others are paid at closing. These include earnest money, down payment, typically ranging from about 3.5% for an FHA loan to more than 20% of the purchase price. The home appraisal, home inspection, property taxes, and first year's homeowner's insurance. Loss of relocation flexibility. It's much easier to break a lease and move out of town than to arrange for the sale of a residence. Selling the home from out of town involves its special logistics and financial problems, such as dealing with the mortgage while the home is on the market. Financial loss potential. Homeownership builds equity over time. However, equity doesn't equate to profit. If home values in your area go down or remain stagnant during your time as a homeowner, the appraised value of your home could actually decrease, putting you at risk of a financial loss when you sell. Disadvantages of renting. There's no equity building. The monthly rent you pay goes to the landlord. It represents the fee you pay for using the property. You gain no ownership in the property, no matter how long you live there. No tax benefits. While homeowners can deduct property taxes and mortgage interest on their tax returns, renters aren't eligible for housing related federal tax credit or deductions. Home improvements go to the landlord. Any structural and decorative home improvements that renters make belong to the building owner and will have to stay behind when you move to a different place. Additionally, approval for desired major redecoration will be necessary. After all is said, the decision to buy or rent depends on the prospective home buyer's circumstances. There is no denying, though, that a home of your own is a good financial and a great emotional investment. An investment in a home can also mean an investment in the future of your children. Little is better than leaving a home behind as a legacy for your children to enjoy. There is much to consider when you want to buy a home. Switching from renting to home ownership is highly challenging, but an exciting and amazing decision to make. Owning a first home is the first step in the direction towards the home we've all been dreaming of. Because at the end of the day, as we all know, there is no place like home. This was the second video in a series entitled Home Buying 101. It is my goal to educate you and bring clarity in real estate. Help me spread the knowledge by smashing that like button and sharing this video. Drop me a few lines in the comments below and let me know your thoughts on this video in particular and its content. And don't forget to subscribe to my YouTube channel and enable notifications by clicking on that little bell to ensure that you get notified of all future videos. Again, my name is Armen Mardirousi with Ravens Rock Real Estate Services here in Glendale. I've included links to some useful resources in the description of this video. Be sure to check them out. Hope you have a wonderful day.
818-355-2850. My goodness, what are you waiting for? Pick up the phone. Give me a call.